For more on what this deal could mean for fintech and the big banks, let's bring in Sanjay Sakrani, Managing Director at KBW, a Stifel company. Sanjay, great to have you with us. So just to pick up where we left off, who do you think the biggest losers are? Who gets displaced the most when buy now, pay later really catches steam?
So I think what the market is telling you, it's twofold. One is sort of the incumbent payment systems, because what's happening is these transactions are being captured through ecosystems or clusters of consumers, whether it be Square, PayPal, or Apple. And then it's also perceived, maybe it's the financial institutions like the consumer lenders I follow. So I cover credit card companies, and people are nervous that this is going to disintermediate their lending capabilities.
Would you agree with that, though? I mean, does your business model and how you view some of these credit card companies that you cover change with something like a buy now, pay later? Do you think their models have to change as well?
Yeah, it's a really good question. I think that there's definitely some validity to the merchant processors that are plugged into those merchants, some of those volumes being steered towards aggregators. So if this was a transaction coming into a merchant acquirer, this can now go through an aggregator like Square or PayPal, and that changes the way that process is processed. And so I think that definitely there's some risk there. Whether or not it disintermediates a credit card loan, I kind of feel like it's a different product. To me, a buy now, pay later product requires a much greater significant outlay of funds in a given month relative to a credit card product. So I think it's a different loan. There's a different loan attribute. So I don't know that it does at this point in time. It could also be a good entry level type of loan for someone who doesn't have credit and then can be graduated to a credit card loan.
Sanjay, it's Karen. Thanks for coming on. What do you think about the credit quality here? And not just for Afterpay, but more broadly, we seem, we're at a very good place in the credit quality cycle. What do you think?
Yeah, I mean, I think I heard some of the conversations earlier, and I kind of agree. We're really early in an economic recovery. So I think there's lots of opportunity to, for the consumer to lever up and for lenders to make good loans. I think as this recovery becomes long in the tooth, that's when we've got to start worrying about things. So at this point, I think it's fine. I think we just got to come back to, who are these loans being made to? Are they being made to people like us, or are they being made to people that really can't get credit today or don't want credit? And I think it's a little bit of that today.
Hey, Sanjay, Tim, so there's multiple reasons why Square's stock was up today, I think. One may be the enterprise merchant relationship that Square kind of eases up into from its SMB roots, small, medium-sized businesses. Can you talk about that?
Yeah, I mean, I think it sort of benefits Square twofold. One, it gives them a product in buy now, pay later to cross-sell to their 70 million plus Cash App consumers. And then it also gives them access to the large merchants that Afterpay has relationships with, right? So to the extent that these large enterprises didn't want to make an integration with Square in the past, now they have one with Afterpay, and that allows Square's customers to potentially have access to those merchants. So I think the benefits are twofold, among others, such as it gives Square an opportunity to grow outside the US, where it's very heavy.
The last question, Sanjay, and that is, based on what you now know about Afterpay, are you comfortable with the potential credit risk that Square is now acquiring in that future period when things may not be so great, consumer credit may not be as high a quality as it is now?
Yeah, look, I mean, I think these are very short duration loans. So, we're talking 2-month loans, and we'll have to see how large a part of their business it is at that point in time when the cycle's about to turn. But I think our call just generally is we're really early into an economic expansion, and it's probably not something you need to worry about right now.
All right. Sanjay, thanks for your time. Sanjay Sakrani. We appreciate it. Jeff Mills, what's your take here?
Well, first of all, I think, the credit risk versus is the acquisition a good idea or not. I think having the capability and adding that to the quiver that clients can access for Square and Cash App, I think that probably outweighs the credit risk going forward, especially given the size it's going to be of the business, at least in the near term. But let me just go back to banks really quickly, because it's very clear that this is sort of an existential threat to banks, and this is an issue that they're going to have to deal with via technology development and other investments. But I did think it was interesting, just from a trading perspective, I would have expected banks and financials generally to be off a lot more than they actually were today. You know, with the 10-year pushing through 120, you may have expected a little bit of a bloodbath in the space. Not necessarily the case. You've seen some pretty extreme outflows from banks, financials generally speaking. So that actually makes me feel good from a trading perspective that we might be finding some footing here. You might be able to play banks, financials as a trade.
Yeah, Karen, I'm sure you're surprised by that action, too.
Well, I'm thinking about the KRE, which is the regional bank, versus the XLF. Right. So these big money center banks do have a lot of other levers. You know, they have their investment banking business, asset management, which is a great business. They have capital markets. All of those have been huge. But if you look at the regional banks, they don't have a lot of that. And this core product, you know, this picking off that customer, that's a very difficult situation to be in.